Market structure is one of those crazy concepts that can either be misunderstood or can be misinterpreted if you are not being too careful. For this video, I'm going to break down exactly how you are supposed to spot a real market structure shift, how to spot it, right? So let's get down to it. First, what is market structure shift? In our last class, we've talked about market structure, right? The break of structure to the upside. Let me mark this again. Sorry, I didn't have time to prepare much for this class. Let me do this again. So we talked about market structure, and then this is the bullish market. This is the bullish market type. When we are breaking structure to the upside and we keep respecting the low. Don't forget, I said I'm intentionally pointing out the fact that we are respecting the lows in a bullish market structure. You can see, right? And then all of this starts from a what? It starts from a trend line. This is a trend, and then this is a trend line. See all this low? They are called trend lines, and then this side is the trend line. Now you see at the end of all these swing points, at this low, at every low, because you know we keep taking out the highs, right? So we keep taking liquidity from the highs. But what is happening? We are building up liquidity at the lows right here. So no matter how bullish the market can be, at some point it has to be bearish also. So what does it do when it becomes bearish? It starts hunting for the lows, right? But there are two types. We can say a pair is naturally bullish, right? Like USDJPY now. USDJPY is naturally bullish, but that doesn't mean we have to be buying, we have to be bullish all the time, right? There are times where we are going to be bearish on the chart, and there are times where we are going to be bullish, but most times we are always bullish on USDJPY. So in this scenario now, I'm going to be explaining the way market structure shifts should be perceived. Now let's say on the higher time frame, let's say like on the daily time frame, we have something like this. Now on the lower time frame, you know, this I said a swing on the lower time frame is going to be multiple swing. This swing alone is going to be something like this. You're going to be having something like this. You're going to be having something like this. Just for this swing, same swing we have here, it's going to be something like this. On let's say the like 2 hours or 1 hour time frame, it's going to be something like this. Now, when do we say the market structure has shifted to a sell? Because obviously we are in a buy scenario currently. Now, on the 2 hour or the 1 hour time frame, which is a smaller time frame, if we break this low, this is called a market structure shift. This is called the market structure shift, right? So in this scenario now, you can say you want to start selling. You can say you want to start selling from this point now, downward, downward, downward. But as we are selling downward, is it guaranteed that we are going to come here? No, obviously not, right? Where are we guaranteed to come to? This low right here. Because don't forget, I said it, a single swing on the higher time frame will be represented as a very well defined swing on the lower time frame, something like this, right? So the moment we get a market structure shift inside this one swing right here, what's going to be happening? We are going to keep on selling till we take out this particular low. Then we can either do something like this. When we get here, it's either we now get another market structure shift to the upside and start buying something like this. This is a market structure shift back to the upside, and then this would have been what? This would have been just a, what do I call this? Don't forget, I said in a bullish market we have impulsive move and then retracement move, right? So what would this be now? This is going to be an impulsive move. This is going to be an impulsive move, and this would be what? This would have been just a retracement move. So this was not a market structure shift. This was never a market structure shift on the daily time frame, right? This is just a retracement move on the lower time frame. So get it right. The fact that you are bearish on the lower time frame, like the 1 hour, does not mean that that pair has now started moving bearish. But if we had done something like this instead, you had done something like this instead, and then we break this low right here, giving us this breakout structure to the downside, right? So what are we going to be calling this one now? This is now a market structure shift on the daily time frame. Now let's say this was the 1 hour time frame, and then this one was like, let's say 4 hour time frame. Now if you are doing this on 4 hour time frame, and then let's say the daily time frame is looking like something like this, is something that is looking like this, right? So daily time frame is something that's looking like this. This is just how it looks like on the daily time frame. I'm still going to explain this on the chart, so if you do not understand this diagram, it's just chill, relax, and just listen to my words. You will get what I'm trying to say. Now we've gotten this market structure shift on the 4 hour time frame now, right? But this is the swing that happened on daily time frame. This point to this point to this point. That was the swing that happened on the daily time frame. So where are we going to get our market structure shift on the daily time frame? This is it right here, until we break past this low. So this is just like a swing on 4 hour time frame. This is like the daily swing, that's how it is being represented on the 4 hour time frame, and this is like the 4 hour swing, how it is being represented on the lower time frame too. Right, so when we broke this low now, what are we going to be targeting next, or where is price likely headed next? This point right here, or this point, or this point, or this point, because these are all points of liquidity where the buyers enter the market, right? So price might get back to this point, price might sell down to this point, and then the buyers that entered here initially might still push price back up again, right? And then this point also, this is the point where sellers enter the market, right? Sellers can still come here. Don't forget, this is an impulsive move now. The moment we break this low, this becomes an impulsive move, right? So we are going to do something like this till we get down here. Now if we break this low, then we can now say that overall this pair is now a bearish pair. It is no longer bullish, it is now bearish. Now let me give you some scenarios on the charts. Let's give you some scenarios on the charts. Let's start on the weekly time frame. On the weekly time frame, Euro USD, what are we reading exactly? Let's see. From this point, we had this push to the upside, break of structure like this. Right? We broke this structure, and then from here we broke this structure again. From here, did we break structure? Okay. Okay, I think in this class, let me quickly point out a fake out and a breakout structure. Fake out versus breakout structure. Alright, so which one is a fake out? Which one is a breakout structure? Say we are in a bullish scenario. Let's again, bullish scenario once again, and then we had something like this, and then our next candle does something like this. Let's say as we are going up, we had something like this. So this was the previous high, and then the candle that went through it did something like this. Let's say this bullish candle did something like this now. Okay, this is going to be a red candle because obviously this candle opened at this point and closed at this point. This is where the last candle ended. This one opened here and closed here, so this is a bearish candle, right? So if the candle did something like this is not a breakout structure, this is a fake out, right? This is a fake out. What do I mean by a fake out? It is a fake breakout structure. It is not real. Just as simple as that, it is not real. It is a fake breakout structure. It is a trap. You think this is a breakout structure, right? So let's look at some examples on the charts before I go to explaining market structure shift on the chart. This is quite important what I do. So look at this is our previous high right here. This is our previous high. You can see how this candle went up here, right, and then rejected back. Did it close above? No. So what differentiates a fake out and a real breakout structure is that the candle needs to close above it and give you a strong momentum to the upside. Look at this one now. After we closed below it, it gave us a strong momentum to the downside, and you can see we only had a retracement move before we started selling again. Look at this one too. After we gave a strong momentum to break this structure to the upside, you can see how price retraced and then bought again, and same thing happened here. It was only after we get a strong momentum move to the upside before price retraced and then went up. But look at this one now. Did we break it? No, we did not break this structure right here. So what happened? Price rejected and then it started selling, right? So we never had a break of structure to the upside here. It was only a fake out. This is a fake out. Let me show you some other examples of fake outs. Okay, this is a real breakout structure right here. And sometimes fake outs can also be you can have a candle close like this scenario now. Would you say this is a breakout structure? No, I wouldn't classify this as a breakout structure. Why? Because after this candle sold down, right, the next candle that opened, it showed a real displacement, a big, you can see the momentum of this bullish candle, right? You can see the momentum of the bullish candle buying back to the upside straight, right? So this is not a strong sell signal. This is a rejection also, although the candle closed below it, but that doesn't mean we are now bearish. It does not mean that there is a market structure shift, right? So market structure shift or breakout structure, right, the candle must always close above or below. This also is also a fake out. This is also a fake out, right? This does not mean it's a breakout structure. It does not mean we are now. You can see immediately we close, immediately this candle closed below it. What happened next? The candle started buying back up. It started buying back up. So this type of scenario you do not exactly call them a breakout structure or market structure shift. This I can still call a breakout structure. I can still call this one a breakout structure. Although because we are in a bearish trend, we are in a bullish trend, sorry, you see we've broken structure to the upside here. This is a fake out. Yeah, this is a good example of a fake out. You can see how we got to this point, rejected, then we went back downward. But this is the consolidation I warned you about, right? This is the consolidation I warned you about. Now let's see what happened here. Let's see what happened inside this zone. You can see how we were moving from up to down without a clear direction. From up to down to this up again, then to this down. Right. Now what happened after the consolidation? Price swept. So a fake out can also be called a sweep of liquidity. Price swept liquidity from the bottom and then it displaced to the upside. This is now where the breakout structure happened. So you can call the breakout structure a displacement also. When price moves in its original direction, it is called a displacement. So what do I mean by this? Look at Euro USD. We've been bearish, right? We sold down to this level. Don't forget I said no matter how much it can be tanking, there will be a period when it has to buy too, right? So this one is naturally bearish. Euro USD is naturally, if you can look at it, this is weekly time frame, and on weekly time frame, every candle in this time frame represents 1 week. So if we are selling massively like this in each swing, you can see in each swing we keep selling like this. What is common in this chart now? What is that one thing that is common? Is that after every sell, there is always a pushback, a buy. After every sell, there is always a pushback, a buy. After every sell, there is always a pushback, a buy, and then a sell again. Right? So what is this? Impulsive retracement, impulsive retracement, impulsive retracement, impulsive retracement. And in all these things, what is that one thing that is also common again? That's what that other thing that is common. We keep respecting the highs. In a bearish scenario, we are always respecting the highs. Respect the high, respect the high, respect the high, and then respect the high again. Even currently, we are respecting the high and we are about to sell again. You can see we got into the high again, we are about to sell. So what happened in this scenario is that everything that happened here is just after price give us this low, the buyers were supposed to give us the what? The retracement move. We got an impulsive, the correctional move or the retracement move. Now because the sell here was a very strong sell, you can see how every week kept closing bearish, every week kept closing bearish, every week kept closing bearish, right? So now the buyers now want to come back to the market and give the retracement move. What's happening? The sellers are still in the market, they are still competing hardly with them, right? So they both have equal power. There is no defined leadership in the market, right? And the price started moving up and down, up and down, up and down, until price now swept liquidity from the bottom. Now what is this supposed to do? This is supposed to trick some traders that do not understand the difference between a breakout structure and a fake out to think that this is a breakout structure to the downside, so we should continue selling since we are already bearish, right? So this is a breakout structure to the downside, we should continue selling. But what did price do? Price came back, disrespected the high, because this is a fake out. So this high is not a strong one, right? This is also called, you can also call it accumulation, manipulation, and distribution. I think we'll talk about it in our next class. Please, someone should remind me. Accumulation, manipulation, and distribution. Let me write it down. I'll be dropping this in my next video too. Accumulation, manipulation, and distribution. Okay. And distribution. So after the accumulation period, price swept, giving us this fake out, and then we deliver to the upside. Now what is this? This is a market structure shift. And what happened in the market structure shift? Because we are bullish for a while, what did price do? Price came back to respect this low again, because now we are clearly bullish. We've broken structure to the upside, right? This is a breakout structure to the upside. You see, first breakout structure, second breakout structure, because this was a retracement. After we broke this structure to this one to the high, we get this retracement and then to the low. So price came back here to respect the low, but we are already bearish from the higher time frame. So price did what? It just respected the high again. Price respected the high again and then sold off from there, giving us this breakout structure. So that is why I said in a bearish scenario, when we are bearish on the higher time frame, price might retrace and give you a buy for a short time, but the long term direction of the market is always going to be bearish. We are always going to be bearish. What happened here again? We got a breakout structure to the upside, right? We had a breakout structure to the upside. After we respected this low, look at this now. We had this one market. This is a market structure shift. Now, why is this a market structure shift? We had breakout structure to the downside. This is a breakout structure to the downside. Another breakout structure to the downside. Then this is also another breakout structure to the downside. Then after this, sorry about that noise. After this market breakout structure to the downside, what happened? Price started buying, broke a high. You know, in a bearish scenario, you are not supposed to break high. This one broke an high to the upside, so we had this breakout structure to the upside, market structure shift, right? After that market structure shift, what happened again? We had another breakout structure to the upside. Right? Did we have another one again? Yes, we have another one to the upside. So what did price do before it broke this one? Before it broke this one, which is this move right here, price came back to the low. The origin, right? Let's say somewhere around there, because this is a fair value gap. Also, we'll talk about fair value gap in some other classes. I think we talked about fair value gap in the anatomy of a candle class. Anyway, I'm still going to talk about it in POI class, so fear not, I will still talk about it, right? So price came back to the low, right? This favor lookup right here, and then it went up again. But because of what? Because we are still bearish, we are in a bearish market. Price is still going to respect the overall high, which is right here, and that is where we are selling from here. And then the accumulation has happened here again also. You can see this is an accumulation. Now inside this accumulation, what is that one thing you've noticed? Price has swept the high, and it is about to displace to the downside. After price swept this high, you can see we broke a low, but in all this period, were we able to break any structure? No, there is no clear break of structure here. So what did price do? Price swept this high. We had a sweep of high, which is also called sweep of liquidity, fake out, whichever one, but I think it's best you call it a sweep of liquidity, because that is what you're going to be using in the long term, right? And then we had this break of structure, this market structure shift, of whichever one. This is market structure shift. You call it a market structure shift if you were previously bearish and then you break structure to the upside. It's like this now. We were bearish, right? We are selling, then we broke the structure to the upside. So this is a market structure shift. The first one, market structure shift. The second one, break of structure. You get? So break of structure, fake out, market structure shift. So if we break this low, when we break this low, what's it going to be called? This is going to be called the break of structure to the downside. It's going to be called the break of structure to the downside, and then we are going to keep selling, tanking, right, till we get to this, probably this low. Now at this low, that is where the buyers or the sellers are now going to determine who is in control again, because this is a low, that the buyers entered, put their money till we got to this side. So price can either do something like this at this point. Price can either do price can either come back here, sell off, or just totally disrespect that zone, or it will just totally disrespect the zone like this, come to this high right here, because this is the high that created this low, obviously, right, and then disrespect it and continue tanking. Where are we going to tank to? This point right here, because this is our last low before we got this whole retracement to the upside, right? So if you do not understand market structure shift and breakout structure, you will most likely not be able to read the market. So you need to understand it. Fake out. Let me write it out. Don't forget, please, someone should remind me to hold this class and talk about this before we move on, right? Someone should remind me. I will just add it to my note also. So what was I saying, right? Break of structure, right, or displacement. You can also call it displacement, because we are already in a bearish in a bullish scenario, right? So every structure broken to the upside is a displacement. Market structure shift, MSS, market structure shift, and then a fake out, which is also a sweep of liquidity. Fake out or liquidity sweep. Now don't forget, I think I've told you, at every swing point is money, right? At every swing point we have money there. So this point, money, right? We have money, and then this one, because we are in a bullish scenario, we keep taking out the sellers money, because it is the sellers that push price downward, right? So in a bullish scenario, we are taking out sellers money, respecting buyers money. Take out sellers, respect buyers. Take out the sellers, respect the buyers. We've broken structure to the upside again. So where are we going to come down again? We come downward, and then we buy again. Now on the lower time frame, if we get something like this, say something like this, in the lower time frame, and then we break this low, right? So what's going to happen? We are most likely, yes, we are about to start selling, because we've gotten the market structure shift, right? we're about to start selling. Market structure shift, so we want to sell, and then we'll start doing something like this. What's this? Start doing something like this. Don't forget, this is a naturally bullish market, right? Because on the higher time frame, it is showing us that we are buying. Now if we break this low, until we break this low, we cannot confirm that this is now a bearish overall. But on the lower time frame, we've broken the low, so we are bearish on the lower time frame. Does not mean that we are bearish on the higher time frame. Now if we now break this low, say we break it to the downside like this, right? Where are we going to be targeting next? This one right here. I'm going to explain the psychology behind that right now. Why we should be targeting the next point. We'll break this one next. We'll break this one next. This, and then we'll break this one next. Why we are doing this is simple, because I said it's money, 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 money. So what is moving price? What is moving price in the chart? Basically money. Money is price here. Price is magneted to money, right? So this is a point where the buyers entered. This is where their money is going to be put. Stop out, their stop loss or whatever. This is where they put it, right? So if the sellers are now targeting, because don't forget, when the buyers are targeting, they target the seller's money. Buyers target seller's money. Now that we've gotten a market structure shift and we are selling, what do you think the sellers will be targeting? The old money for the buyers, which is this one. But you don't predict, you react, right? So if price break this one, you know this is to be taken out next, right? This is to be taken out next, and this is to be taken out next. It's not like you now say, okay, because we've gotten this particular one market structure shifts now, price has to take out everything though. No, price does not need to take out everything. Just target one first, and then the next one, then the next one, then the next one, and then the next one, right? Let's see if I can. I think that basically explains it all. That basically explains the market structure shifts. Now in the next class, I will talk about the accumulation, manipulation, and distribution. Then we'll now go to liquidity itself. We'll be moving down to liquidity next. Liquidity. Because now that we've known market structure and direction of the charts, right, we need to know what is actually making them move. What is making price move? What is price magneted to? The logic behind price movement, and that is liquidity. Basically, that is everything that you need to know about price movement. It is hunting liquidity. It is not doing more than that. Nothing more, nothing less. It is just hunting liquidity on the chart, right? So see you in the next class. Have a great day, everyone.